Good evening, this is Melissa with thestockswoosh.com. Tonight I'm going to review a play for you for ARAY. This is a gap from January 4th, 2013, and it's a failed gap. Okay, it's a failed bearish gap. Boom, that's it. Failed on the day. I have to tell you, though, that the gap is still a bearish gap, and it's still good. Not Friday. Okay, it didn't work right on Friday, and I'll go over why. Because the drop happened pre-market in the morning, but the gap in and of itself is still bearish. In other words, this chart is not something you want to buy. This is a dangerous, deadly gap down that has changed this chart, and it's real. Okay, let's take a look at it. There's no way this is a buy. All right. Now I'm going to go over what happened with this on Friday and what I did in it. But don't buy this. Just because it rallied on Friday doesn't mean that the gap isn't intact. The gap's intact. This is real. This is damaging to the stock. Boom, that's it. Okay? The fact is that this went to target pre-market. All right? It just did. All right? It went down actually pre-market to, let me find it here. It was 471. 471. Here. There it is. Right there. That's where it went down to pre-market. Boom. Look at that. Perfect. So that's what happened before the open. I watched it, and actually before it did that, I was talking in my trading room, and I said, you know what, here's the first target, here's the second target, and the first target I had was this, and the second target I had was this, and I didn't think it would get I thought 450 was like the be-all, end-all target for this in the day. I wanted it to rally on the open to take it to short it into a sell setup because it had gapped down so far and bounced off of a target. It didn't work out that way. I'll go back and show you in a minute. The reason that it failed on the day was that it went to the target pre-market. And for whatever reason, it got bought, okay? Why? Who knows why, okay? There's lots of times these things fail, sometimes for no reason. They don't fail that often, though. But once in a blue moon, they will fail, okay? On the day. But not overall. And I'm going to come back and check this just to show everybody, because everyone always says, oh, gaps fill themselves. That is such a fallacy. Gaps do not fill themselves. This stock is never going to rally back up here to this number, which was the previous day's close at $6.60. I don't want to say never, but it isn't going to see that number for a long time. So that's a fallacy. Gaps don't fill themselves. That's not why this got bought here. Part of this was people who shorted it all pre-market, real shorts, okay, real shorting that happened, and then they covered their shorts in the open, and then also some day traders decided to buy this then when it went over the high of the day, which I'm going to go over in a minute. And then there was some buying that came in here. Why? Because it hit $5. Okay, so there is real actual buying that came in here because it hit $5. And I'm going to go over that in a minute. So you can see from the 15-minute chart that it opened, tried to go lower, didn't bounce off of the 5 and the second time, which I'll show you in the 1, but ran up until 11:15. But that was it then. It didn't keep going. Aced out the rest of the day here, flat. And how much do you want to bet this goes red on Monday? In fact, this is on my watch list for next week. All right? It just I'm not saying it's going to fall off a cliff on Monday, but I'm just saying many times when these things don't work the day of the gap, they work the next day or the following day, all right? They work eventually within the next couple of days. It just didn't work as a short the day of the gap. Now, that being said, as I'm sitting here looking at this 15-minute now, this is a rally into resistance. This is a rally into resistance as I'm looking at this. This isn't real buying. So this just confirms what I saw on the daily chart. I'm just looking at this 15-minute chart here now. That isn't buying. There's a difference between a rally into resistance for a short or buying, like real buying, okay? And this isn't real buying. I can see that now. I just saw that here. So this just confirms everything that I was seeing on the daily chart, actually, which is nice. So I definitely have 100% conviction that this gap is still intact, even though it didn't work right on Friday. All right, let's go look at the 1-minute chart here. Okay, here we go. So first of all, it's a $5 stock. I was looking at the average move of the day. The average move of this thing in the day, in its biggest day of its life, is probably like 60 cents or something. So it's not like I was expecting some kind of big target in this. Like I said, 471 the pre-market price, or 450. So I wanted it to rally up so that I could get it at a better price to take it down to get more of it, all right? And then what happens is if I get a rally into the open, then I'm sure that once I get a sell set up, I'm clearing out all the buyers to move it lower, all right? So I wanted that to happen, and it gave it to me, all right? It actually gave it to me. Here I got in right here. This is a sell setup right here. It did a boop over here. Thought I was going to hold 520. This is valid. Looking back here, because it did the sandwich of the red bar, it had to make the boop, and then it did the topping tail here. Here's the entry. Rallied up, stayed in it. No problem here. Nothing, not doing anything wrong. Here's an ad right in here. So I'm in this thing now, and I added into it. I literally was looking at another chart, which I'm going to do another video on in a minute, ENDP. And the second I was looking at that in the market, this thing went down. Here was the exit. 502 was the exit, and I'll go over that in a minute. And as soon as I went back to it, it just did this bar right here, and I was like, ugh. And I didn't get out of it. I didn't end up getting out of it then. All right, and then I finally got out of it then when it went over here over the space, and then I just took it off because I knew that it wasn't going to work because it should have continued down here into 10 o'clock. I was giving a lot of room here and an extra time because it was a big get down. I was giving it room to wiggle and jiggle, but then I realized that this should have broken 5 to go lower, even though it was pretty quick. Not because it did a sell setup, not because it happened right away, because sometimes these take time when there's such big gaps, but here's the reason why, okay? Because this thing opened, went down, bounced off 5, not hard, which is why I took the short in the first place. This wasn't a hard bounce off of $5. If it had been some kind of hard bounce off of 5, I never would have shorted it. So I wasn't wrong in doing so, but looking back, again, I missed the exit here. I would never have known this wasn't going to fall through until right here, okay, right here. And so here was the exit here because it didn't break under the low of the day here, and it had gone down past that pre-market, and this is a whole number, all right? I literally, though, missed it. I mean, I had my chart on something else. I missed it. I could have just killed it right here. I just killed it right here with some profit into this green. And then I kind of was making excuses for it. And this was looking better here with this 20 and the 8 pushing down in it. And then I just realized it wasn't going to work in here and took it off. The point is, though, that it tried to go lower right here. And because it didn't break under the low here, which was a whole number, it wasn't going to continue. Because it went to the target pre-market. And when something goes to a target pre-market, what do? Doesn't mean you don't take it. Doesn't mean you don't take it or play it on the open. Doesn't mean that at all. It means that you must see the follow through lower in the morning trading between 9:30 and 10 o'clock, which is the most important time to trade gaps. And if you don't see that continuation of the follow through lower into what it needs to do, all right, then there's a problem. All right, and that was the problem here, number 1. And number 2, it opened, touched down at a whole number, and bounced. I've seen that happen, and I've seen it happen egregiously as a bounce. Because that didn't happen here, I wasn't scared off of it. But again, this just confirms my whole thing with this thing, which is really, this thing is still lower. All right, just didn't work right on Friday. Didn't get hurt in it, but it just was annoyed that I missed this exit here. Perfectly legitimate trade, just missed the exit. And that's why it's so important, okay? It's so important to stick with what you're doing in the morning, number 1. And sometimes I'm flipping back and forth lately and looking at the market or something else because there's lots of things to look at. Even though it's so early in the year, there's been stuff to do in the last couple of days. I mean, there has been stuff to do. There's been stuff to trade. There's been gaps to look at. Even though the market has been nowhere still for the most part, there has been gaps to trade, which I'm thrilled with. It's just important for me to focus on one thing because it is so particular that you could literally list your exit in a millisecond. That's how fast it can happen. And that's just what happened on Friday. So let's just go look at the 5-minute here. Yeah. Here was where I missed the exit. This bottoming tail is the red bar and then the green bar retracing it. I saw this, and I was making excuses for it, and then I saw it doing this. I was just making excuses for it, and then here's where really, it just wasn't going to work after this. But I gave it all the chance I could, and then of course I couldn't retake it. There's no retaking it after that. Fails to go lower, goes over the high of the day. It's after 10 o'clock. Big gap down. Market's starting to go red. You're not reshorting it. You're off of it. Didn't work right. Take the loss. Find something else to do, which is what I did. I did the ENDP, and you just move on. Okay, you don't fight it. You have your bias. You want it to work. You take the trade. All of a sudden, you're up, and you're all invested, and then you miss your target, and it doesn't follow through, and it's a dinky target because the thing decides to fail on the day. And what do? You just say, fine, whatever. Okay, you don't beat yourself up. Sometimes this is what happens. This is trading. The whole idea is to keep your losses to a minimum and play the things out correctly and play them out with size when they work well. And this just wasn't the day for this thing. I just have to be clear with everybody. When my bearish gaps don't work on the day, I never, ever, 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 ever flip and buy them, and neither should you. It's a dangerous thing to do because the fact is the gap's intact. The bearish gap that happened on Friday is intact. There's nothing wrong with it. It's not going to fill the gap. That doesn't work. That has no meaning, and that isn't even real in the market. Okay, and this is a bearish gap, and it's going to follow through. And we're gonna track it. We're gonna watch it. I'm gonna do another video on it in a couple of days. So this is Melissa with thestockswish.com. If you have any questions, please feel free to email me at melissa@thestockswish.com. Thank you, and have a good night.